Facebook is up. Just waiting on YouTube. All right, YouTube is fine now. Okay. So everybody's fine, all recording. All right. Good evening, good morning, depending on where you are. My name is Derren Joseph from Tax. We're the team that seeks to demystify cross-border tax. And today we have the honor and privilege of speaking with Augusto Paulino. Please, Augusto, introduce yourself.
Hello, everyone. Thank you, Derren, for this invitation. So, in brief terms, I'm a tax consultant here in Portugal for more than 20 years. And in our tax practice at DSK, we have a number of private clients that decide to move to Portugal for different reasons and from different jurisdictions. And I think the idea of this session is to try to share some of our knowledge about the tax matters around the change to move to Portugal.
Fantastic, thank you. And with that, let's jump right in. Could you talk us through the key points of what is called the transitional regime from the end of 2023, please?
Okay. So with respect to the non-habitual resident regime, the NHR, which ended in the 1st of January 2024, when the law has changed in a way to end this regime, it was introduced a transitional period or regime that on one side guarantees the rights and the expectations of those who were registered as NHR until 2023. So they can keep applying the regime for the 10-year period, counting from the initial registration in Portugal. So that grandfather clause was foreseen. But the idea was also to introduce a kind of guarantee for those who started the process of changing or moving to Portugal during 2023 or even before, but did not complete the registration for tax purposes in 2023. And then this transitional regime allows that even registering for tax purposes in 2024 can still benefit from the regime if certain conditions are met. For example, having a rental agreement or a promissory agreement signed until October 2023. Having, for example, other types of contracts related with real estate, or even having a contract, employment contract or secondment agreement already concluded. Those situations are foreseen in this transitional regime, and well, it's the only option available for those who do not complete the registration until 2023 to get this NHR.
Okay, fantastic. So, just to kind of quickly summarize, it wasn't a situation where people were left high and dry. If it is that you, as you said, you had begun to make concrete steps to establish yourself in Portugal, employment contract, rental contract, maybe even, reserved a place for the kids in the international schools, or whatever it is, something, a document that can demonstrate that concrete steps were made to establish, your home, your new home in Portugal. You should qualify under this transitional regime, transitional arrangement, which is of course a good news story.
Yeah.
Oh,
Yes,
sorry.
and for giving another example, in case the process related to obtaining the visa or residency permit was
Mhm,
started before the year end, and
mhm,
if it is already appointed the residency visa application, for example.
mhm. Okay. All right. Thanks a
But
lot for that.
those situations are specifically foreseen.
Okay. Good. Now, let's talk about this new program. I don't know whether the right term to use is NHR 2.0, NHR 2024. I guess you could start off by telling us how do you term it? And when I look at at least the English translations of it, they pay a lot of attention to scientific research and innovation. So could you comment on this new direction?
Okay. So this new, I would call it tax incentive for scientific research and innovation. That's the translation of the regime. Um, um, it's difficult for me to call it NHR or new NHR because the way the benefit works and the scope and also from a technical tax perspective, the way it works is really different from the NHR. So I would call it new tax incentive for now.
Okay.
But as you mentioned, is specifically focused on activities of research and innovation, and it's definitely related with substance of those activities in Portugal,
Mm.
because the criteria to be considered as benefiting from this regime is to be related with definitely with a company, with a business in Portugal.
So previously the focus was on whether you have one of these high value professions, right? So now the focus is on not just what you do, but the company that you're doing it with. Both are important. Is that fair?
Yes, it is. Yeah, that's it.
Okay. Okay, gotcha. So, having said that, let's take a step back and give us your thoughts on the old system versus the new system. Your thoughts and pros and cons, and which you think it's more appropriate. What are your thoughts on the old versus the new?
Okay. So the NHR um, um, was focused not exclusively on the high value-added activities,
Mhm.
irrespective if those activities were performed from Portugal to abroad, if were performed partially in Portugal, but also covers other, I would say, beneficiaries like pensioners or even wealthy, high net worth individuals, because the benefits were attributed depending on the income stream
Mm,
that the individuals may have. And some benefits may work for some, other benefits may work for others. And the regime was available for everyone that moves to Portugal, and the only requirements are becoming tax resident and not being tax resident in Portugal in the previous 5 years. And from that on, anyone can benefit from that regime of the NHR. The new regime is totally different because to benefit from this regime, the individual needs to have an activity that fulfills the requirements and can be in new list, let's say, of roles and functions that can benefit from the regime. So, for example, if someone who is a pensioner moves to Portugal, so this new regime is not applicable at all. Wealthy individual that moves to Portugal only has passive income, this regime is not available for him. So this regime is focused for someone who has employment or self-employment income and moves to Portugal to perform such activity.
Okay, that is, of course, a huge change. Sorry, yeah, I'm seeing somebody wants to ask a question. Please do add the question below, and we'll ask it at the end of the other questions that we had submitted in advance. Thank you. So let's go back to the idea of foreign pensions. Under this new regime, and someone is coming in where they're retired and they have a pension, whether it be from government service or private service, how would they be treated from a Portugal tax perspective?
Okay, if someone moves to Portugal in 2024 and the NHR is not an option, it's not applicable, and if the only source of income is pension income or investment income, so this regime would not have any kind of benefits applicable to those pensioners, meaning that the pension income would be taxed as a standard taxpayer in Portugal at the standard personal income tax rates that can go up to 53% if we had the additional solidarity tax.
Wow. Okay. So having said that, is there any provision in the tax treaty which potentially may benefit someone coming in on a pension?
Yes, because depending on the type of pension, it could be the case. It could be the case that pension income can be taxed in Portugal or in other jurisdictions. It depends.
Okay.
And it is also important to evaluate, for example, tax credits.
And so on. So they can, I mean, like worst case scenario, the regular scenario would be up to 53% with the solidarity tax, the top up on top. But alternatively, could it be exempt from tax in Portugal or to 10%? Or is that option no longer available?
No longer available.
Okay.
Unless you benefit from the NHR, you keep that benefit for the future.
Okay, gotcha. All right, that makes it clear. Next question. So I guess connected with that would be foreign social security. So if they're, they're retired and they're recipients of social security from the US. Again, I know it's going to be you to some extent repeating yourself, but just for the avoidance of doubt, to make it absolutely clear, what happens if you come in right now dependent on US foreign social security?
Yeah, the social security benefits would be treated in Portugal as a pension income as well. So the rules are the same that you mentioned about pension in general.
Okay. All right. Fine. So again, just avoidance of doubt. What happened before, the past is the past. It is no longer going to be benefiting from either zero, which is the old regime, 10%, which is the old regime. It's now regular, like everything else, potentially up to 53% without solidarity tax up on top. Okay, gotcha. All right. Next question. What about LLC if someone has a limited liability company from the US, which, just to provide context for those who don't know, it's a hybrid entity. So unless someone makes a special election, is deemed to be tax transparent. So typically in the US, the LLC itself is not usually taxed, but the members, whether it's a single member or you have multiple members, in which case it's a partnership, the tax would lie in the hands of the members rather than the entity. So that's generally how it is. So let's bring that into Portugal. Someone moves to Portugal with being a member of an LLC. What happens there?
So in the respect of the taxation, so the principles would be the same, will not change. So the way that an individual that moves to Portugal perceives income from an LLC would be treated more or less in the same way in the past. So under the NHR regime, we had the discussion about how that income would qualify from a tax perspective in Portugal, either as an investment income or even business income, or other type of income not specifically foreseen in the double tax treaty, because under the NHR regime, it was relevant to evaluate how the income would be treated under the double tax treaties concluded by Portugal. And the exemption from taxation would depend also on that. With this new regime, if someone moves to Portugal and has the right to this new tax incentive because, for example, performs a role in a Portuguese company that can qualify for the regime, and apart from that also has income from an LLC in the US, would be exempt from taxation because this new regime grants exemption of foreign income without additional requirements in terms of having actual taxation at source, for example, or the other country have the right to tax.
Okay, so this is potentially a step up from what existed before. So again, once you qualify, and of course it's more difficult to qualify under this new regime, but once you do qualify, no further questions, foreign source income excluded. Simple.
Yeah. And we have that we can use also as an example the discussion around capital gains, because under the NHR usually taxation of capital gains, for example, the portfolio securities, as a general rule, would be taxed at 28% and would not benefit from the exemption. So in this case of the new regime, the new tax incentive, it could be the case that also, for example, capital gains on securities are exempt.
Okay. Again, it's simple, and it is it clearly is more attractive than the situation that existed before, which is that's good to know. Of course, again, I know I'm repeating myself, but it's more difficult to qualify for this new regime than the old one. Moving on, it's C Corps, and again, those who don't understand the U.S. system, under Chapter C of the U.S. Tax Code, a corporation that is so formed is different from an LLC in that it's opaque. So it's not a pass-through. It will actually be a taxable entity in the US. So if someone does sit in Portugal as, let's say, the owner or shareholder in a US C Corp, what does that look like? Assuming that they do qualify under the new regime, the dividends would clearly be tax-free. But is there any qualifications to that we need to consider?
Well, about the nature of the income, it still qualifies as a dividend and
Yeah.
also exempt under this new tax incentive. However, of course, with respect to a company that is a C Corp incorporated in the US and subject to corporate income taxes in the US, other matters may need to be evaluated about, namely, the taxation of the company itself. For example, if the effective place of management can be considered in Portugal or any kind of other presence in Portugal. So those are other matters that need to be evaluated.
Absolutely. We need to be aware, like you always do. You need to be conscious of and sensitive to issues of permanent establishment, whether there is any effective management taking place in Portugal. Definitely creates it could create a taxable presence. Okay, thank you for that. And this goes back to, so this was a question that was submitted in advance, and I see that Surrey has that question down below as well. Can you tell us what's going on with crypto? What changes would be made to the treatment of crypto under this new regime?
Okay, so the rules applicable to the taxation of crypto assets do not change. So the internal rule remains exactly the same. So an individual that becomes a tax resident in Portugal would need to report worldwide income, including gains deriving from any activities with crypto. We have the rule, and just trying to summarize, we have the rule, for example, in case of trading that foresees exemption of any taxation in case the crypto assets are held for at least 1 year, and that would be the same rule. And of course, if we have income related to business activities that are paid in crypto, that would be a different approach, and it can be deemed as business income or payment for services, let's say. It is relevant in this case the moment of cash out as well. Well, but basically the taxation of crypto does not have any change. It's also important to note that, as I mentioned, if someone may benefit from this new tax incentive, the examples that we discussed before about the full exemption of income from foreign source can also be applicable, for example, in case of capital gains derived from the trading crypto.
Okay.
So for example, even if we trade for less than held the crypto assets for less than 1 year, it could be the case that we get the exemption if it's considered foreign income.
Okay, so this is interesting, and I guess that's the point being made in the chat box below. Portugal could potentially be even more attractive than it was before for crypto investors. If it is that you're a trader, if you qualify, and it's more difficult to qualify, but if you do qualify, you could potentially benefit from tax exemptions for trading income, so less than a year, potentially. And if you are an investor, even without the new regime, you buy and you hold for more than 1 year, the capital gains are potentially tax-free as well. Good summary?
Yeah.
Okay.
Yeah.
Fantastic. And just to kind of tack on another question being asked, how does it apply? It would apply to anyone who is tax resident in Portugal. As to how one becomes tax resident, we've covered this on several occasions. But quickly, Augusto, do you just want to comment on how does one trigger tax residency?
Okay. So basically, we have two requirements or two triggers. The first one is to spend more than 183 days in Portugal in each 12-month period. And even spending less than that time in Portugal, you can also be considered tax resident if you have in Portugal the dwelling property with the intention to use it as your main abode.
Okay, so again, so to answer the question posed in the chat box below, yes, you can qualify even if you're a European citizen, to the extent that you make Portugal your place of habitual abode, or you just do the time, more than 183 days in a calendar year. Portugal is welcoming. So
yeah,
okay,
yeah. So this regime, of course, it's applicable once you become tax resident, and keeps the additional requirement of not being tax resident in Portugal in the previous 5 years.
Right. So newcomers, this is about newcomers. Gotcha. Okay. Moving to the next question. Blacklisted. What is the impact? Well, perhaps this has less to do with the new regime, but about taxation in Portugal in general. How is your personal situation impacted by having any sort of structure that involves a so-called blacklisted jurisdiction?
Okay. So in this respect, I would say that it doesn't change much, because also under the NHR regime, if income is derived in blacklisted jurisdictions, the income will be subject at a flat rate of 35%. And under this new tax incentive, even considering that the wording is not that clear, would say that the same taxation of 35% would apply.
Okay, gotcha. Business as usual, right? And next one, what about the new regime and the taxation of foreign trusts? Any changes there?
Well, I think that the same discussion that we already had about the nature of the income and how the exemption would work will apply. So we need to evaluate the nature of the income that derives from the trust, and see if we can get the exemption under this new tax incentive as well as income derived from foreign jurisdiction.
Okay. All right. So again, Portugal doesn't necessarily recognize the concept of a trust. It's just viewed as a fiduciary. So we need to look at, as you say, the character of the income coming from the foreign structure. And if it is that you qualify under the new regime, it's foreign, so it could be potentially excluded. Otherwise, it's all in and you pay tax like everybody else. Okay?
Yeah.
Gotcha. And last but not least, this is a question for me. So I've seen this in my feed on tax updates, that Portugal's tax authorities have introduced a new rule about foreign asset reporting, particularly with offshore accounts. Could you comment on that, please?
Yeah, so in general terms, in Portugal, even being a tax resident, you need to report the number of the foreign bank account, but you don't need to report assets held abroad or the balances of the bank accounts. So there is not a requirement to report assets held abroad. With the state budget for 2024, a new change was introduced in order to being mandatory to report assets held in blacklisted jurisdictions. So it's basically an additional reporting rule, and the idea, of course, is for the tax authorities to have information about the assets held in blacklisted jurisdictions, which can be real estate, portfolio of investments, whatever, spare, whatever. And this would not be applicable, as we understood, for 2023. The tax return that needs to be filed until June this year. At least the forms of the tax return do not foresee that information to report.
Okay, fantastic. So I'm just gonna have a quick look below in Zoom to see any other questions. I just had a look in Facebook, there are no questions. I'm not seeing any in LinkedIn. Okay, so I think we're good. That means that we have covered everything that was asked of us. Augusto, thank you very much for sharing your valuable time, because right now it's busy. Everyone's busy with tax season, so taking time off from serving your clients to come and share with us your thoughts and give us insights into these updates. If anyone wants to find you, if anyone wants to reach you, what's the best way to do so, Augusto?
Okay, so my email, I would say, so it's augusto.paulino@dfk.com.pt.
Okay, so Augusto, that's augusto.paulino@dfk.com.pt, as in Portugal. Thank you very much, and we'll see you next time. Bye-bye.
Thank you.